Some IPOs promise bold new chapters. Others reveal the story beneath the surface. Mynt's public debut is billed as an IPO, but beneath the headlines, its true nature is far more nuanced. A landmark transition for both the company and its early financial backers. To understand why, start with the fundamentals. When companies list, the shares offered are usually classified as primary or secondary. Primary shares bring new capital directly into a business, helping fund future growth. Secondary shares, however, allow existing shareholders to cash out, channeling proceeds to private investors rather than the company itself. Mynt, the force behind GCash in the Philippines, is offering just over 1.6 billion primary shares. Yet more than 6.4 billion secondary shares are up for grabs, alongside an additional overallotment option exceeding another billion secondary shares. At a top-end price of 10 pesos per share, Mynt will raise around 14.95 billion pesos in net proceeds from the primary shares, while selling shareholders could pocket up to 74.3 billion pesos if the overallotment is fully exercised. The company receives nothing from those secondary sales. Why does this matter? In classic IPOs, a primary-heavy structure signals a search for growth capital. Secondary-heavy offerings often signal that early backers are ready to monetize their gains. Mynt's transaction delivers both, but the balance is unmistakable, more than 4 times as many secondary shares as primary. The sellers are institutions with deep roots in the private market rise. Bow Wave Capital, for example, invested when Mynt was valued at just $1 billion, a pivotal moment that crowned GCash as the nation's first fintech unicorn. Now, with an IPO valuation approaching $10.9 billion, Bow Wave can crystallize returns reflective of years of patient capital. Ant Advanced New Technologies, the Ant Group-affiliated fund, played its part in validating Cash's ecosystem. Now its Singapore-based investment vehicle is among the major sellers, while Ant International Technologies remains invested, marking the distinction between liquidity-seeking holders and strategic retainers. Insight Partners and Lion Fintech represent late-stage growth investors, entering Mynt as a proven category leader. Their role is clear: inject capital to scale, then exit as public market interest emerges. The LGVP vehicles, though smaller, typify the wider institutional cluster participating in this liquidity event. It raises the central question: what are public investors buying? The listing creates float, improves liquidity, and opens access to a company previously locked away from public hands. Yet much of what is raised simply rewards earlier investors. Only the primary proceeds go toward credit tech, product development, reserves, and corporate goals. Ultimately, Mynt's IPO is both a public market milestone and a value realization for the funds that underwrote its rise. As GCash becomes national infrastructure, new investors are invited into the next chapter, but the event is also a carefully timed monetization for those who arrived first. In a market where headlines rarely tell the whole story, clarity is the foundation for confidence.